So today I actually want to do a part 2 review of the iFunds instant funding prop firm. And this is largely because I did get some new insights from them, but at the same time it also confirmed a lot of my initial thoughts. This video is sponsored by the Prosperity Algo Prop Firm Bundle, a portfolio of 6 EAs designed to pass prop firms and get consistent payouts. Click the link in the description to get a 1-week free trial. So I had made a review on iFunds a few months back where my conclusion was compared to your more standard prop firm, like a 1-step or a 2-step, it didn't really represent all that good of a deal just because of how expensive their accounts are relative to the account size. And my view is that they're pretty much just a broker giving you a different form of buying power. And that view is still fairly consistent, but there's actually some more good insights I got from watching this interview with both the CEO and the CTO of iFunds done by Mr. Petko Alexandrov. And in this video, they actually explain in detail how their business model works. And it actually does confirm a lot of the initial thoughts that I had, but it also gives us some more insights as to why I wouldn't even consider this an actual prop firm, and I'd consider it more like an in-between between your personal account, a prop firm, and this kind of instant funding prop firm. And this firm, I think, actually does present a really sustainable long-term business model, which is a bit different than many other instant funding firms in the market, which still follow the same more evaluation style model where they rely on significant amount of traders failing in order to meet their cash flow requirements. So what they were explaining in this video is that they're able to pay out regardless of traders win or lose, because effectively, like when you buy an account, you are covering their market exposure. So it's much easier for them to hedge their risk because they're able to effectively, like, your maximum overall loss is essentially equivalent, at least in the smaller accounts, to the amount you're paying for the account. And that enables them to hedge a portion of your risk in a live funds account because of the fact that you're actually giving them a significant amount of capital up front. So almost similar to a broker, like they could essentially take your participation fee and lever that in an account, or though simply your participation fee is almost equivalent to the total amount risked. This enables them to more effectively hedge your payouts, and it's more akin to a broker than a traditional prop firm. And it's tough to go into all the calculations and how this actually makes sense in such a short video format, but I'd really encourage you guys to go and watch this video and then just do some basic math here to kind of understand it for yourself. But the real benefit there is that they're essentially more like a broker than a prop firm because they're effectively taking your deposit, they're levering it, but instead of just giving you more like debt style leverage, they're giving you more like equity style leverage, or they're giving you more buying power. What I mean by that is, let's do the actual math, the 2.5K account. Like here you're getting a 2.5K account with a maximum overall loss of 10%. So your maximum overall loss here is $250. And your cost of the account is $250, right? So even if they were to put this in a live funds account, they're still just taking your deposit and putting it in a live funds account, because realistically the only total loss here is 10%. So what they're doing is they're essentially just giving you a 1 to 1,000 times levered trading account. Because with a traditional broker, you could put this in an account and you can get 1 to 1,000 times leverage with, let's say, Xness. With these guys, you're putting your $250 in an account, and they're giving you a 2.5K account with a 10% drawdown. That is just a 10 times leverage. And then on top of that, they're giving you another 100 times leverage here. So if you do the math, it's very akin to just an 1,000 times leverage trading account. And that's why they're able to give you so many perks, such as you can get paid out the same day because it's like a broker would do that too. And effectively because they're making their money not primarily through failed challenge fees, or I'm sure they're making some off failed challenge fees, but they're also able to just make money off you even if you are still a relatively profitable trader, because they're able to make money off the spreads and the commissions as a normal broker would. And because they're almost like this hybrid between a prop firm and a broker, they're able to, in my opinion, offer a relatively sustainable business model. And you can go through some of the bigger accounts too. And I'm sure like their exact hedging math changes a bit as the accounts get bigger, because like you're not exactly 100% covering the deposit the bigger and bigger the accounts get. But I'm sure they figured that at a certain point they are able to subsidize winning traders through like more failed challenges, while at the same time more effectively being able to hedge traders in the market because of the fact that the accounts are also very expensive. So what I would compare this to is if you look at the traditional like one-step, two-step prop firm accounts, the accounts are so cheap relative to the notional value of the account that it's very difficult for a prop firm to actually in any way hedge you or put any live funds in the real market, because you're just giving them such an inconsequential amount of live funds. But what these guys are explaining, and I'd really encourage you to watch the video, is because like your max drawdown is relatively close to the amount of money you're paying them, you're putting in a pretty significant deposit. And that deposit can then be used to kind of create this hybrid broker prop firm approach. And I think this makes a lot of sense. And if you look at like a firm like online trading campuses, like so Bansko Pinsky's prop firm, I think it follows honestly a pretty similar approach. And there seems to be a whole new business model in this prop world, where effectively, if you have enough money up front, and you can essentially act as a new kind of broker. Instead of giving 1 to 1,000 times leverage, you can give 10 times buying power and then 1 to 100 leverage. And because of the fact you're putting on relatively strict risk controls on traders, you're able to protect yourself as a pseudo broker. And this is a different approach to like your traditional prop firm, because you're less reliant on failed challenge fees to actually make money. Because yes, you're still going to make money off failed challenge fees, but at the same time, you're able to operate under more of a traditional brokerage model, so that if somebody's good, you can hedge the majority of their exposure in the marketplace, while at the same time being able to make money off their spreads and their commissions. And it's kind of an interesting approach, and I think it does show another path to long-term sustainability in the industry. So for us as prop firm traders and for personal capital traders, what would we do? I personally would not treat this the same way as I would treat a prop firm. Prop firms just give you such an amazing ROI, but there's always like a higher risk element of will they actually pay. These guys, I'd say, are more akin to kind of a hybrid between that and a broker. A broker, if you're using a good broker, you should have complete confidence that you should get your money out of them. Because even if they give you a funding bonus or a deposit bonus, you should generally get your money out of a broker. These guys, I think, are somewhere in between. Because they operate in this hybrid broker model, they're far more likely to pay you, and they give you far fewer restrictions than most prop firms would. I've also heard from many clients these guys are easy. They always pay you. That makes sense because they're kind of a pseudo broker. But at the same time, they are giving you significantly more buying power from a balanced buying power than most brokers would, because very few brokers give you a 10 times deposit bonus. Right? So it gives you kind of this in-between method where you still have very interesting form of leverage, but it's not quite as not even nearly as cheap as a prop firm. So where this works is this only works if they essentially are guaranteed to pay you. Anytime you start to introduce a risk factor where there's a higher likelihood they won't pay you, then it's no bueno, right? Because you're putting your outlaying capital at risk without necessarily having the same ROI. So your risk reward in terms of the opportunity isn't as good. What I view this as is if they actually pay, it's a good third category of investment. We have our prop firms, which are just pushing out cash with an extremely high ROI. We have personal capital, which is even more like a long-term investment. If you're using very safe trading, you can just put a longbow style bot in an account with Swissquote and just set and forget and make 60% annually. And this one here would be kind of an in-between, where you might have a few accounts with them, which are a bit more pricey, but you're still able to recuperate your investment. And this is almost replacing the account flip or the high-risk personal account style through their kind of hybrid approach. So yes, anyway, my general view here is I wanted to kind of update my opinion, being like, I think these guys are a bit different than most instant funding firms, provided what the CEO and CTO are saying are true, but the math does actually support what they're saying. The high prices it does make sense if you kind of understand a little bit about how the brokerage model works. And this also shows how stuff like the campus fund from Online Trading Campus are likely running their business. So I thought this was an extremely interesting interview. I wanted to share it with you guys because I found it pretty enlightening. And at the same time, I do see it now an additional application for these guys. I probably won't go for the maximum sized account for now because spending 30K on a prop firm account seems a bit hefty, but I'm sure there's some good applications here. So guys, hope you enjoy the video. I'll see you in the next one.